All right, welcome back to the channel, Crypto Trend Trader with that midweek market look. We've got our, 8 p.m. on Wednesday, Eastern Standard Time. And obviously there's quite a bit of volatility taking place right now. Now, if we did see, at least a temporary bottom in this pretty intense selling, looks like it's probably going to come in at like a key pivot point. But before we do get started, I want to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. We'll give Bitcoin a minute to kind of do its thing here, and we'll just get started as we always do with the 10-year Treasury. Just like I specifically stated, Treasury came down exactly, touched our key support line, touched our key Fibonacci level, and it's been bouncing. This right here was a very important candle. Very clearly got bought up aggressively, and since then, we basically have just shot straight up. We are already back at the previous highs, just slightly short. I think we made it up to like 1.76% on the 10-year. We're at 1.70 right now. Strengthening, very clearly got the bearish control zone, hard buy signal, multiple green histograms, the cross, the 821 cross, key support. So this looks like it's strengthening. And then with obviously now everybody's worried about inflation rather, and all these numbers coming out that look bad, especially like when you look at them over like the annualized time frame. So, I expect this to just keep shooting up as all of a sudden, this is exactly what we talked about. It's whether you like it or not, whether you want to call it inflation or not, whether it's transient or not, it's right here in front of everyone's faces. And even if it's not actual inflation, it's temporary inflation, like what we're seeing with like the pipeline issue right now. There's multiple ways that prices can go up. In this case, there's plenty of gasoline. They're just having trouble moving it. So if they can't move it to where it needs to be, people charge more for it. So that's caused the price of gas to go up. Doesn't mean gas is always going to be more expensive. Doesn't mean gas is going to ever come back down. But it just means right now that the price has gone up because there's an issue transporting it from where there is supply to where there's not supply. So what we need to pay attention to is that what's causing the inflation that's taking place right now? Or is this going to be wage inflation, which leads to long-term actual inflation? So here we have the DXY chart, dollar index. And, we talked about this quite a bit. I was talking about how if we broke down below this level, I wasn't ready to give up on it yet. And then we got a powerful move back up, retested essentially resistance, and then broke down from there to a new low. Now, once again, the most important thing, though, is that we're always looking at levels. So even though we had like a diagonal break right here, and potentially we're looking at the substantial like yellow one down here as well as like potential support as well. Neither one of those actually held. And then in the end, what we were paying attention to is, obviously our next level. And that's what I'm talking about here, which is the horizontal. Did we take out this previous low down here at, basically 90? And instead we bounced it and we closed slightly higher. And then we got a very aggressive move. Now, once again, the same way I didn't look at it right here as, oh, that's it, now the dollar's just going to strengthen. It's the same situation right here where, we got an aggressive bounce back up, but, is it really that much more aggressive than the selling? Is it really that much more aggressive than the selling? So are we just going to come up here again and fail and keep selling off? Well, we need to pay attention. But as long as we don't take this out, we still have a low, a high, a higher low, a higher high, and then once again, still have a higher low. So we could come up here now and put in a higher high. Well, if the dollar goes from down here at 90 all the way up to like 95, like we were initially expecting, that's going to shock quite a few people who are convinced right now that the dollar is just going to roll over and die. So, don't want to get too ahead of ourselves on these situations. And it's always important to have like key levels where it will invalidate what we were thinking or, revalidate it in this case. So, but I'm sure everybody is looking forward to seeing crypto as there's a little bit of craziness going on right now. Just like I said, the 8 o'clock close is potentially, it's our daily close. So potentially going to be an area where you might see something turn around. Let me switch over here to Bitcoin. Obviously, there's like some aggressive buying coming in right now. We can see on the daily here that we have sold off and basically closed slightly higher than this previous close right here. But, you know, once again, more importantly, we're looking at like the actual pivots. We're looking at this high up here is the most important high. And then we want to make sure we didn't take out the last pivot before that. So whether you're looking at this one or this one, you know, you could say that was our high. This is a low. This is a higher high. So as long as we're still putting in a higher low, we're fine. So we really just don't want to see this sell off lower than 45,000. Now, you know, for something that was just at 55,000 to go down to 45,000, you know, I'm sure that's probably scary to some people, but we're seeing a decent amount of volume come in, seeing quite a bit of pressure. It's no surprise, obviously. You know, the most important thing was trying to take out this previous all-time high up here at 60 whatever thousand, and you know, this essentially lower high Fibonacci key level rejection just tells us we're going lower. The question is you know, are we going to find support now at another key Fibonacci level? We're going to keep selling off. So let's take a look and see. So this daily chart right here, we obviously have massive volume candles coming in. Massive volume candles coming in. So, you know, more than likely, this is strengthening to the downside right now. So, you know, we're at the neutral area here. More than likely, what we would see is, you know, more selling based on what we're looking at right here. Now, if we go to the on balance volume, this is a very important one right here because, you know, when this starts to like level off and the slope line starts to decrease, and then we start getting below the slope line, we're at potentially one of two things. We're either at the best buying areas in an uptrend, because if you bought every time it did that previously, it was basically the bottom, or we're beginning to flip from an overall uptrend into a downtrend or extended consolidation or retracement period. So that's what we're looking for once again. So we're looking for clear market triggers that this is no longer going to be the bull trend that we've been experiencing. So now switching over here to, this is actually the futures chart, but once again on the daily, and I have the moving averages pulled up here. This is what we were talking about this was the first time this entire trend that the 8 and the 21 crossed to the downside right here, and we sold off below it. And then from there, we had looked like we were about to save it. Well, as soon as we sold off back below it again, you know, a couple days ago, it started looking super shady because we could not get back above it and stay above it. And now here we just flipped over the parabolic SAR red again after only just a couple days back to the upside. And this basically looks like, what does it look like? Price went sideways while the indicators and oscillators floated up. So it looks like a bearish reset. So if we have a high, we basically bounced up, tried to come back up and close the gap, which is what we were expecting, obviously. You know, I specifically spoke about how I expected price to oscillate between 45,000 and 60, I think I said 60 to 62,000. So we made it back up. We made it down to 47,000, which is pretty close to 45,000. And then we made it back up basically to 60,000. So we basically nailed that move right here. And what did I say? Well, regardless of direction, I expected to oscillate within that range. So we tested the bottom of the range. We tested the top of the range. Here we're coming back down to test the bottom of the range. So what's going to happen? Are we going to put in a higher low right here? Are we going to put in the same low? Are we going to put in a lower low? I mean, before we spoke about the front run of the 89. Here we are coming right down right now, touching that 89, you know, which once again is what we would expect to happen. I see a couple of the, okay, it looks like futures is holding up a little more stable right now. I have like the actual like traditional markets going as low right here as like 45,000 and 46,000. As where this thing is literally just at 49,000. So not quite as aggressive on futures, but we are getting down here low with the knife. This is coming in rather suddenly all at once at like our daily switch. So, you know, what do I typically expect here? Well, I would expect obviously like quite a bit of buying to come in once the momentum starts waning. But when is that going to be? We have to wait and see. I mean, it could play out in the next hour and we could carve out a bottom. Or, you know, we could sell off aggressively, put a nice wick in below the 89, and then it gets bought back up and close at the 89. I mean, we'll have to see, you know, but obviously this is a fresh daily candle. And, you know, futures switches over a few hours ahead of the actual traditional markets. So this futures candle basically was 54,500 is where it closed its daily, as where like our traditional markets daily candle closed at about 50,000. So there's like a 10% difference between where we closed at. And this is basically like our today's candle. So typically, if we're going to see a violent sell-off like this and then it gets bought back up, what you're looking for is either like a big green candle as the next daily candle or a massive wick which essentially shows like a rejection of lower prices. So that's what I'm going to pay attention to today and see how this plays out. But as of now, the 8 and the 21 are crossed on the futures market to the downside for the first time since September of last year, which is when we're at $10,000. So, this was our uptrend from $10,000 till, basically $60,000. So that's a 6x. Is it unrealistic to think now that we would have an extended sideways or sell-off period? Not at all. Not at all for me. And while I'm not going to sit here and call the top on each and every one of these tops right here, we've been talking specifically about what it looked like was going to happen. Well, to me, we sell back off, cross the 821 to the downside for the first time. The bulls step in and attempt to regain control of the trend, and they failed. The bulls have attempted to regain control, and the bears have won. So now the bears are stronger than the bulls. So what does that mean? Well, this was the bulls stronger for the last however many months while Bitcoin 6x'd. So now we know the bears are stronger. So, how long is that going to last for? I don't know if it's going to last this amount of time. Typically, it will be like 33% to 50% of the amount of time that it was bullish for will be like our consolidation or retracement. And then we're going to look at key Fibonacci levels for like how violent of a pullback we're expecting. So the most important thing right now, when we look at this chart here, when you glance right at it, this was a clear top at one point in time, and this was a clear bottom at one point in time. And then since then we've went up, and then now we have a new top. So to me, when I just glance at this chart initially, what I'm going to pay attention to is our Fibonacci retracement from that bottom right there to our top right here. So looking at Bitcoin exactly as we are now with the bottom of 28,900 to the top of 66,000 on futures, we're exactly at the 382 right now. So we already touched the 382 previously. We already, touched the 89 now. So what is our next target to the downside? It would be the 0.5 of this move, which is 43,700. Now again, traditional markets have already almost reached that, and these numbers will be slightly different, but you can get a rough idea what we're looking at. So then the 618 of that move would be 39,500, and then we start having our like 200 moving average exponential here in blue, and then simple in like the darker blue, coming in at like the 786, 886. But again, if we start getting down below the 618, it's going to look very unlikely that this is just going to bounce and then put in a new high. You would think more realistically that the bull trend has lost strength and that we'll see like a potential further retracement. So now if I take another Fibonacci and I go from our low back here at 4,000 up to our, high here at basically like 65,000, I'm going to turn that one green, and we can take a look at that one and see how that corresponds as well. So here we see the 236 of the macro uptrend comes in line perfectly with the 786, and it's right in between the 200 exponential and 200 simple. So that's got basically 1, 2, 3, 4 factors all coming in right in that range. So if we do sell off here violently and we see, further move to the downside, where are we going to be looking to see that trend like turn back around and head back to the upside? Well, I would say somewhere in between, essentially this area. Now, this is obviously a very big buying area. So what we want to see is, because it's such of a broad range right there, we really want to see this like carve out a bottom and give us a clear indication that this is bottoming out somewhere in this range. We don't want to just be looking at essentially like from 30,000 to 40,000 and just layering in along the way. We're looking more realistically for an indication along the way, whether it's an aggressive wick, whether it's, a key turnaround at daily close time, weekly close time, etc. So, but more realistically, the next main area that we're going to be looking at for like the overall trend to turn back around will probably be the higher end of that range. But again, we could bottom out right here, get a wick, and then come back out and put in a higher close than this one right here, and then continue back to the upside. But I don't like how, if we get an 821 rejection like this on a daily after we saved it the first time or attempted to save it the first time, basically came back up, filled the gap, and then now we're dumping. And if you look at the aggressiveness of this sell-off candle, and granted it's got 20 more hours, so it could literally just bounce and carve and just grind its way all the way back up, and it could finish green. Changes the perspective completely. But right now, this looks like complete shit. I mean, this looks aggressively to the downside. And then if we look at the traditional markets, we came down to like 45,600. So, depending on what exchange you're looking at, this one is Bitstamp, was how aggressive it was. But in all reality, you know, we haven't technically taken out this low right here, so we could bounce this and come back up. We haven't technically taken out this low right here. You know, we wicked down and then it got bought back up. But if we do start closing a daily candle below either one of those points, that to me is the danger zone. But again, then what do? We just look at the next level down. And in this case, you know, our next level for like a low support is going to be back at like $30,000. So there's a bunch of support on the way down. The most important thing I'm paying attention to right now is this just another pullback to gain strength before we continue on? Or is this potentially the trend topping out? And, you know, based on what we're looking at with the moving averages, this is looking to me like potentially the trend topping out. But again, we could easily go to $100,000 after sustained sell-off, like, you know, consolidation. It would not be uncommon to me for this thing to come back down, test the daily 200 exponential or simple moving average, and then continue to the upside for the remainder of the year. So let's switch over just to a little longer of a time frame here. And, you know, this is exactly what we had been talking about forever. You know, it's finally happened. Are people going to be happy with it now, or are they going to be expecting more? Because we talked about forever a weekly pullback eventually to the 21 exponential moving average. We slightly front run it right here, but here we are, a perfect touch of it. So now are we going to bounce this area and continue back to the upside? Or, you know, are we going to consolidate below it, kind of get like a little sideways action? We have to wait and see. Are we going to break down from it, etc.? But it's not unrealistic to think that we could essentially dance around that 21 moving average and then continue back to the upside. But now here on the weekly, just kind of shutting off the drawing tools, once again, is this a trend change, or is this, you know, just a consolidation or just a retracement? So let's look at what's been going on. Well, we flipped over the parabolic SAR to green back here in May of 2020. So from that area, we were in a bull trend the entire way up, with the exception of 3 weeks here, and now this is the third week of the second time when it flipped over bearish. So in all reality, if we put in, this was our 3-week consolidation, and then we took it out, never came back to the 21. This is a 3-week consolidation, and we obviously have taken it out, and now here we are at the 21. So we're either losing strength for a consolidation or losing strength for like basically a longer pullback at this point in time. So the question is, you know, where's it going to end up at? I spoke about the weekly on this futures chart right here. When we get that sell, we get that buy, we get that sell at the top of the range, you know, that's the divergence indicator. Same way this is right here. We're in the bearish control zone, all green right here, and then we get the buy, we get the sell, we get the buy. This is like a perfect signal because they're all touching. This one is a little more sloppy, a little more spread out, but again, you know, doesn't need to be respected with as much authority as this one here, but it's definitely like wait a minute, better take it easy here because we might be topping out. And then considering the fact that we have now left the bullish control zone, we have multiple weeks of red histograms in a row, and we're also just like way above some of these moving averages. Is it unrealistic to think we could come back down to like 30 grand? No, I really don't think it is. A 50% retracement from the top, I think 32,000 is looking more and more realistic. You know, anywhere around that range at least. So, but once again, want to be careful with this. Don't want to get ahead of it, but at the same time, want to make sure that we're respecting it. But here on, you know, we've been talking about how the weekly time frame looked worse than the daily. The daily was starting to show some signs of life. Well, once again, the weekly is painting like a very clear picture of bearishness. And now here the daily is sort of doing the same thing. So next we'll look at basic attention token. I mean, look at this absolute craziness right here on Kraken. That's just absolutely phenomenal. That's why I love this exchange. It sold off as low as $1 and then shot back up as high as $1.33. And now here it is right smack in the middle, you know, at a key support area. So, you know, you had basically a single 4-hour candle, probably like 20 minutes worth of price action, take this thing, you know, basically from the bottom to the top and then back down again, you know, 30% essentially. So can't beat that. Can't beat that. Overall though, you know, if we switch over to our longer time frame, look at the daily on this thing, you know, same situation. We saved the 821 cross, and here we are crossing back down again, you know, testing key support areas. We got a hard sell signal. We have flipped over the slope on this thing. I mean, there's a lot of weakness in these markets right now. Very clearly back down to the 8 moving average. still more bullish than Bitcoin. Bitcoin sold back down and was essentially consolidating at its 21-week moving average. This thing is still well above it. But again, hard sell signal, red histogram on the weekly, showing some weakness here. And I like to look at random charts just to kind of gauge like the difference in the crypto space. Let's switch over and look at Ethereum next. Ethereum, obviously, this couldn't have played out more beautifully. This was our previous fib level we were paying attention to, the 1.618, topped out, came down, consolidated, new all-time high. And where did that one come in? Let's zoom in here as close as we can. That is the 3.618, or no, I'm sorry, that's a 2.618 right here, which very obviously that is our, red box sell zone, or where we thought clearly Ethereum would be topping out. So once again, another target hit absolutely perfectly to the T, topped out here, violent sell-off since then. Again, got bought up pretty aggressively. We'll have to look at, is this daily, going to be basically like the bottom right here, and then we consolidate. But now here we're seeing, since that cross back here, since we topped out back here, and we saw the 821 cross to the downside, here we're seeing it for the first time on the 4 hour. And then if we switch over to the daily, once again, we saw it back here at like 1700, and then we crossed it back to the upside right through here at 1700. And now here we are very, very clearly, strengthening to the upside, hit our target perfectly, getting saved basically by the 8, but we flipped over the parabolic SAR. So, realistically, we're going to start looking at these moving averages for a pullback. And then, if we consolidate between the 21 and the 8 for long enough, we would expect a potential violent sell-off and come back down to some of these key levels. But as of now, this thing is much, much stronger looking. The chart is, than Bitcoin. Now, if Bitcoin starts dumping, I'm sure Ethereum will dump too. But right now, Ethereum is much stronger. And once again, we're getting the hard sell coming out of the bullish control zone. Last time, it was not that big of a sell-off. We got a nice wick in there, but consolidation to the upside. Now we're at much higher levels, obviously, on the TJD, TDMACD. Multiple red histograms in a row. Still a strong blue slope line. So, on the daily, Ethereum still looks good. On the weekly, definitely still looks good. But, once again, we got to be careful. We're getting towards like ridiculous levels. But, if we can cut through this and consolidate here long enough, realistically, like our next targets are up at like 7,000, 10,000, etc. So, what if it does pull back 20% and then doubles again? So next, let's look at the Doge. Sorry, I got my charts all over the place today. Doge, exactly like we said, it topped out right before the Elon Musk thing on Saturday. Since then, you could have got out at what, 70 cents. Key fib level up here, the 1.382, topped out at 70 cents, coming back down. We got to see what it does, but it's already at the 200 exponential and simple on the 4 hour. Let's switch over to the daily. It's below the 21, starting to get that 821, but still a little ways away from the cross. Last time it showed weakness was when it initially topped out at like 8 cents back here, consolidated for a while, showed a little bit of weakness after initially topping, and then came up a little higher. So, if it comes back down to like 26 cents, we'll have to see how it responds in that area. But again, if we start seeing like the 821 cross into the downside or anything, we'll start really paying attention to it. But as far as I'm concerned, like, until the bubble pops on a lot of this stuff, like the bubble doesn't pop. And when it does, you're either out of the way or wrecked. So we'll have to see how it all works out. But in all reality, it's very clear, obviously, all these markets are extremely overvalued. It's not like anyone's like, no one's really even arguing against it at this point in time. Most people, actually, like intelligent people, are arguing the other way. Like, what the hell is the Fed doing? But we knew some of these numbers were going to be scary. We expected crazy volatility to the downside in these markets. It's no big surprise here. Here we got Riot blockchain, very clearly breaking from a bearish pattern, broke down violently, got a reaction, reflex rally off the 200 exponential, got a little bounce and then sold straight back off, right back down at lows again. Looks like total shit. This is the premium is just pouring out of this thing. I don't know how low it's going to go. I'm sure there's a way you could easily calculate it and then sort of figure out like an overshot. But, we're at key support. Was resistance. We would expect it to act as support. We got key moving averages here. Not unrealistic to think we chop around for a little bit. I don't think we're going to get this massive measured move out of it. But if if Bitcoin goes back to 30 grand, what is Riot going to look like? I don't know, but it's not going to be good. But I mean, it's already down. The freaking thing is down from $80 and it's at 26 now. So, I mean, it's down 66%. MicroStrategy, topped out back here at 1300, been in a bearish pattern, tried to emerge from the bearish pattern, got a pathetic attempt at a bounce, new lows, new closes on the daily low. Once again, premium is just going to keep pouring out of this thing. If we lose this support level, which we're at right now, which, we've got a couple wicks down here, but basically this is our lowest close yet. I would expect this thing, at the 200 exponential, 486, then, maybe 420. And then at that point in time, I mean, what are we really looking at right here? I mean, we're really looking at like $350 or $250, or, maybe we see this thing, if Michael and Saylor gets, indicted by the SEC or something, $150. Could we see MicroStrategy at $150? Would it shock me if MicroStrategy was at $150 in 12 to 18 months? No. Matter of fact, you give me good enough odds and I'll take that bet. I'll take that bet against Michael Saylor being in jail too, or at least being, maybe not in jail, but being, investigated / charged / working out a plea bargain. So Coinbase here, Coinbase, this is exactly what we talked about specifically, is we want to see more than a couple days worth of price action to the upside. If you bought this dip down here, if you bought the 2.618, it was a nice like 10% move back to the upside. Actually closer to 20% move back to the upside. But still showing weakness here at the top. I really want to see this thing start to carve out some kind of a bottom before I get aggressive. You can see we're just now populating the 21-day moving average, that like tiny little yellow bit popping up. So we basically got rejected at the 21-day moving average. We're now below the 8. So usually what happens with this is you move up, you get rejected back below it, and then you keep selling off. So, we'll look at our next target down here at 225 or retest at the lows. But I mean, if we're seeing weakness in all the actual underlying markets, I don't expect something like Coinbase all of a sudden it's just going to go to the moon. Everybody that's ever bought this thing is a loser, unless you time the bottom. So I don't think people are just going to be rushing into stuff that everybody else is like losing on still. People typically will buy into strength. Dow Jones Industrial, we're still at these key levels. This was obviously, I mean, you guys know how I feel about all the different patterns and indicators, oscillators, etc. But sometimes one candlestick is all you need to see. And this is the one right here. Very, very clearly, shooting star, hard rejection. We basically moved up. It got rejected hard at all-time highs, sold off completely red, and then gap down, sold off from that, gap down again, and now here we're selling off even more violently. You guys know how I feel about gaps. Most of the time they get filled. Sometimes you could leave a few bucks. So maybe we don't come back up to fill them. But at this point in time, this is fairly aggressive selling, taking out like multiple weeks of upside, breaking down from a key support level back here. So is this looking like the throw over that we've been talking about? Maybe. And is this little throw over going to turn into a giant throw over? Maybe. I mean, we've gotten them before at key levels and then broke down from it. I mean, the real level to watch, in my opinion, on Dow Jones is 32,750, 32.7. If we break down from 32.7, this is really going to start looking bad. If we break down from 30,000 here and the 200 exponential moving average, then it really starts looking bad. If we chop around here, sell off a little bit, consolidate, I mean, it looks good to me. Back to the upside, continuation, but obviously we're not buying at these levels. You got to be an idiot to buy pretty much anything at these levels. SPY, S&P, it's the same exact situation. This looks the most like the Dow chart. Obviously the knife is literally down here at like the bottom. Typically when we see a knife stab come at one of these levels, that's the bottom. This is at that key support level already, where we were talking about the Dow coming back down and retesting that resistance as support. So that red line is like a long trending resistance from way, 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 way back. So if we look at that key resistance, what we're looking at now is, are we going to find support at that and then continue to the upside? Or, are we going to basically break down inside of that? So if we go any lower than where we're at right now and start to consolidate, I would expect heavy selling to come in. And if we come back down to the bottom of the range and start, basically like testing that, I mean, that's back down at $300. Do I think S&P is going to $300? I mean, not tomorrow, but is it possible? I mean, it definitely is, 100%. I mean, all this stuff is way overvalued, and now like reality is sinking in. We basically, like, the markets have priced in absolute best case scenario in every way, shape, or form. So now all we have to do is just live up to the best case scenario, but not be any better, and markets will sell off because it was already priced in. So NASDAQ, we spoke about this. This was the least bullish of all the patterns, but a bullish pattern nonetheless. Spoke about the very key support line that we're seeing all throughout tech in various levels. Here on the IXIC, NASDAQ, we see one test. That was our second test of it. We got a nice support line in place. When we got back down to it here, and then we immediately started to basically, we gapped down and sold back up. I said, I think this is going to be a retest for resistance, and we could very easily break down and see continuation here. Well, I mean, this is what it looks like. It looks like we're coming back down to the 200 exponential simple, retest that key level, and then maybe this is going to turn into just a double top sell-off, etc. But obviously tech's just going to keep getting wrecked. And if all the stuff that everybody's worried about right now plays out, I mean, there's so many bearish forces on tech, not to mention like the fact that it's overvalued. So Russell 2000, but I mean, there's going to be huge opportunity. There's always huge opportunity in like sell-off, capitulation, etc. Spoke about this head and shoulders, and I mean, that was like way back when, before all this happened. Well, now here it looks exactly like head and shoulders. We got our left shoulder, we got our head, we got our right shoulder, we got our neckline, slanted down here. We're basically back at the neckline now. So, I mean, we could extend this out just a bit, and, we're at the neckline. So if we don't find support right here, I would expect us to find support right here, because it's obviously very clear support level when we came down to it before. If we find support right here, we could easily chop around, continue to the upside. But if we don't find support right here, I mean, this thing has got tons of potential to the downside. If we say from the top there, just down to 236, bringing us back down to 1900, 382. I mean, we got our moving averages, but at this point in time, I mean, this thing has been putting in, this was our bearish divergence top right here, pathetic weak top. And then after that, it's just been showing constant weakness. I mean, it got a decent retracement on the Fibonacci, like bullish retracement of the bearish stomp. Came back up to 786, but it topped out, and it's been showing nothing but weakness since then. Inside not only patterns but like candlesticks themselves. So XLE is holding up decent. I would expect this to hold up decent. Overall, I'm still bullish on energy, but I expect a broad market sell-off, if this thing starts to top out. So there's probably not going to be too many safe areas, but I think in the long run, XLE, looks better than most. Clearly just put in like new highs back here. It hasn't been, it's bearish sell-off, gap fill, and then rejection. But I mean, we hit our target. What do you even want from there? We got our breakout, hit our target, topped out. Now we got to see what the market tells us next. Do I want to be long in this right now? No. Am I going short in it either though? No. ICLN, this thing's showing like total weakness. Not like the majority of the rest of like the energy sector. These clean energy ETFs and stocks and everything. This is like the Biden premium coming back out of them, realizing that this infrastructure package is going to take time. When it does, it might not even be actual infrastructure. So, I mean, now, we're probably second guessing, closing down pipelines when we were finally like self-sufficient on oil, and now we're having pipeline issues because of hackers. And gee, who would have thunk that we still need oil? Huh, that's crazy. ICLN looks terrible, putting in new lows, broke down from a key level. We're almost down to the 382 at $20. You guys know how I feel. We got targets in place. I will probably take a stab at this thing at $20. When we get back down to the 382, take this trade setup. But, this is probably the one I'm really looking at. And who knows, at that point in time, we look at like on balance volume. This is clearly flipping over red, and we're getting more selling than buying taking place. I mean, this is what trends look like when they top out. I mean, where else did we ever get this much red? Down here at the bottom, and then we had a pretty solid like pullback through this area. Well, where's that on the chart? That's like a multi-month consolidation, like sideways, followed by basically like a throw over and then massive sell-off. So are we going to get, that was our big dump back here. So are we going to get, we're already seeing more selling taking place than we did like back in some of these other key areas. So this thing could literally just start pouring out. Now, is that going to happen? I don't know. We got to see. But we've been talking about essentially how we're seeing weakness in a bunch of different sectors, in a bunch of different markets, in a bunch of different areas with essentially like everything already priced in. So we got to be careful that this weakness doesn't like come to fruition, because that's what it's really looking like right now. This looks like the market was telling us a story for months, for weeks, depending on where you're looking at. And now the story is coming true. We're getting to find out how it ends. Tesla is next. We're down here. We're at the 200 exponential simple. We're putting in a bearish pattern, descending triangle. I told you guys back here, I didn't think this was the bottom, but we would get a nice bounce off of it. We did. We put in a series of higher lows. We broke down from that series of higher lows. We crossed 821 to the downside. We're at a key support level. Do I expect another bounce here? Yes. Do I expect a lower high here? Yes, until we don't. Tesla looks like crap. It's completely overvalued. I expect it to come back down to one of our other targets. The longer we stay above this 4 down here, that $250 range, the better Tesla looks to me. Because then we can just do a time consolidation, a time, retracement versus like a dollar or percentage retracement or consolidation. But if we don't hold at this level right here, I mean, we got to really start looking at this 236 is the first area at $500. At $500, Tesla is down like 45%. I mean, that's got to see, but that's a very, very key level of resistance flip support, I would expect. So $500 is still the lower end of the range I was interested at. We put this box in here way ahead of time at 550. You could have nabbed the bottom right there, but here we are right back at it again. So if you didn't sell along the way, you might as well have just waited for some kind of confirmation or whatever. And that's exactly how I feel on Tesla. I'm not going to start getting back into Tesla and pouring money back into Tesla and getting bullish on Tesla till I see either a price or time capitulation. And tech is by far the weakest sector right now. And, we're getting to the point now. I saw a thing on like ARK, and I know it's probably getting around the same on Tesla and, some of the other key areas of the markets where there's more people upside down in their trades than there are right side up. So, that's when you start seeing massive selling coming in. When all of a sudden people are like, wait a minute, this doesn't work anymore. And now I'm losing. NEO, NEO is still, it still looks weak. We're at a new low down here, broke down from a key range, came back up, retested it, just like we talked about. I expect this thing to basically hit the measure move or one of these other key levels. We're seeing a little bit of life. The slope line is flipping over blue from a key area. Could we carve out a bottom right here and go up? Yeah, I wouldn't put it past NEO, but I think it's going to take a little time. But I will be paying attention specifically to Chinese stocks because, depending on what they do, you could argue that like the Chinese market stocks, like whatever, everything pandemic related is all like a couple months ahead of the US and Europe and stuff. So maybe we see this thing carve out a bottom and start moving back up. And that gives us like a month or two notice before, American or European markets start doing the same. But let's see. Alibaba still looks weak. We came back up. We got the retest of the breakdown. Once again, just like we talked about, support resistance flip, sold off violently, broke down. Everybody gets bearish. And then we come back up, retest it. It gets rejected. So now here we are coming down lower. We're at key value areas right here, but breaking down from this massive trend line, I'm not going to put it past this market to go lower, to go potentially much, much lower. Again, I'm not trying to like nail bottoms on every one of these things as they start like capitulating. Baidu, it's like the same chart basically. Same chart as Alibaba. We're here at support. It's slightly more bullish because we're still kind of above it. But this was the area, key area we're looking to find support at, going back to basically like, a year ago, a little more than a year ago, back to like the March capitulation here. But, once again, we broke out of a key pattern, failed breakout, got almost no price action to the upside. This thing is one of the weakest charts that we have looked at, the weakest charts that we do look at From where it bottomed out here, we got a 2 fib level bounce. That's absolutely pathetic. And now here we are back down at the bottom, probably going lower. Apple, our trade played out perfectly. We got a nice trade off the breakout, off the measure move. We topped out like literally within dollars of our target. I specifically said I expect us to come down here, find some kind of support, but obviously the longer we chop around at that support, the less strength we're going to see. And here we got the 821 cross to the downside, and that was our signal that we're basically going to be breaking down from key support. And now here we are breaking down from key support, finding a little bit of support at our 200 simple moving average, still slightly above the 200 exponential moving average, but Apple looks weak. It looks weak, and this was one of the strongest. So when the strongest start looking weak, the weakest are probably just going to keep looking worse. Pinterest, broke down from key areas. This was one of the first ones to see that massive capitulation. We saw that rejection candle. It dumped. We saw that gap down. There's still a massive gap here. It wouldn't surprise me if we came back up here somehow and filled this gap at like $76. So, but I'm not looking to gap fill trade this thing, not from where we're at right now. Breaking down from key support below the 200 exponential and simple moving averages. Looks like shit. And you know what? I'm going to flip over. I'm not going to look at the weekly on everything, but I want to pull this up just to give everybody, like that little in perspective. This is our weekly on Pinterest. This is Pinterest weekly. Okay. We got bullish in May of 2020 when we got the 821 cross back to the upside at $20. Since then, it went up to $90. It 4x'd. It went to new all-time highs. Okay. The last time when it first, came out here and we got that cross back down to the downside, it went from $28 down to $10. So it lost basically 66% of its value before it finally flipped back over to the upside. So the real question is now, from when we cross back to the upside, we're crossing now on the weekly has crossed to the downside. So are we ready to lose 66% of our value? Because that's what happened last time on the weekly. We lost 66% of our value on the weekly. So are we ready to come down? Are you ready to see Pinterest back at $23? Because in my opinion, if I owned Pinterest at $66 and I was looking at this chart with limited history on a weekly, I would say there's probably a decent probability that we're coming back down here for a 66% drop from here. Now, does that have to happen? No. Maybe we don't retrace this entire fib wave. But it just so happens that same pullback is going to put us at $23, which is the 618, 61.8% of the move from here, which just so happens to coincide with that 60-something% drop from the 821 cross to the downside. 821's crossing for the first time. We broke down from a very key level at $67. We crossed 821 to the downside. We're at the 50-55 now. Next target to the downside, the 89, $45. I mean, then the 382, $38. I mean, it just stares down. But just perspective on the weeklies and how this trend now, it went from a daily kind of choppy to like looking bad to like now the weekly is bad on a lot of these. Etsy next. Etsy has broken down. Almost immediately hit the measure move. It has been trying to get back above the 200 exponential and simple, which are now flat. We're below them and they're flat. Bearish. Extremely bearish. This is, maybe we consolidate down here and move back up and then go to new all-time highs and we get like kind of a gold move. But if we're below the 200 exponential and simple moving average and they have a slope to the downside, I am extremely bearish on this for weeks and months. We have our 821 cross taking place. We have broke down and capitulated from a key level on this thing. Okay. So yeah, maybe we bottom. Maybe this was the bottom. Or maybe we come back down to 200 exponential or simple and test them. So $75 to $85 on Etsy. Just getting the cross. Red flip on the TJD TDMACD. Stoch give us the hard signal at the absolute top. I mean, the perfect entry for the trade. This is the exact trade setup I've literally had in place for months. Well, we came down to it and then immediately got a 10% move back to the upside. I don't know if this is going to play out. I don't know if this is going to all of a sudden start showing strength. I don't know if we're going to get a 40% move. I don't know if we're going to get a new low here. This is probably going to do what the rest of the market does. This is one of the weakest overall charts, technically. I don't think Zoom's going anywhere, but could a lot of air come out of this balloon? Yeah, 100%. We are down at the 377 right now. We bounced the 377. We bounced the bottom of the channel. If we do break down from this, I mean, if we move back to the top of the channel, it's 40% move. That's great. But if we break down from here, I mean, this thing could go low. It could go low. And it's the same type of thing where, various levels of weakness. But how many charts have we looked at today, and how many of them don't look so hot? SMH, semiconductor ETF. You guys know how I feel about this. We've talked about this. We've watched this play out. We got the 821 cross. Got the 821 cross at key support. I specifically said this was looking bearish, and I didn't want to be in this, and it was going to look like a double top, and that I'm bullish on semiconductors, but not right now. I mean, think about, here's a bearish argument, because I haven't heard anyone say a bearish argument for semiconductors. Everybody has a bullish argument for semiconductors because there's a shortage, so therefore the stock has to go to the moon. Well, what if there's not? What if there is a shortage, but what if the stock's not going to go to the moon because they can only make so many, because there's only so many inputs. They can only get so many wafers, or they can only get, so many built at a certain amount of time, or factories are closing down. So how are they going to beat their numbers? How is this going to keep moving up to higher and higher valuations if they can't make products or sell products or ship products? They can't. It won't keep going up. These things need to keep outperforming. That's the difference between cryptos and stocks that people forget is stocks need to actually perform. They put out like targets, and they have like earnings, and they have to hit those targets, and they get priced in, and they have to beat sales numbers, and they have all these different like metrics that they're measured by. So when they disappoint, they sell off no matter how good they were if they're less than expected. With cryptos, all you got to do is like have a nice marketing plan. And you're like, yeah, we're going to sell semiconductors. Everybody's going to get as many semiconductors as they want. And we're going to meet the need for semiconductors. And we're going to make tons of money. And everybody's going to have semiconductors. That's like a crypto project. We're going to do it. We're going to use cryptographics to solve the semiconductor issue. And you're like, that sounds great. We should definitely do that. Well, how are the cryptos valued then? How are they priced? What are their earnings? What's their profitability? How many, like, there's no actual like targets or metrics to value them off of. Therefore, like, if we start seeing actual valuable companies that are in like bullish spaces start selling off, I mean, obviously I would expect the same or more violent versions in crypto. So, when we do start topping out in these things, people are going to look for value and look at where their money's going to be safe at. Not those speculative plays like, Dogecoin. And in the end, what does all this come down to? There's got to be more buyers than sellers. So more people have to think that there's tons more money and space and room for expansion in the semiconductor space or in the crypto space. And there has to be more inflows than outflows. There has to be more buyers than sellers at these levels. And, it's very obvious, obviously, the more time we chop around at the top, the less buyers are showing up at key times, or the more sellers are making up their minds. So, is semiconductors going to go down low here? Are we going to just touch the 200 and then bounce to the upside? I don't know, but it looks like we're forming, basically a sideways channel after a parabolic move up from $100, up to almost a 3x. And now here we are at 223. I mean, we could have a heavy move back down in some of these things. Heavy move back down. But again, I'm bullish on semiconductors overall, but are they going to be able to meet unrealistic expectations in the future? Are they going to be able to beat earnings? Are they going to be able to do all these important things? I'm not sure that that's possible. I think they're probably suffering from supply chain breakdowns the same way that many other companies are. Therefore, if you can't get, even if it's not supply chain, even if it's just transportation issues, if you can't get the product to where it needs to be to the end user, how are you going to keep selling more of them? Peloton, I know people are talking about this is the bottom. Peloton bottomed out at $80. I do not think this is the bottom. I think Peloton comes back up and potentially retests this support as resistance. It broke down from a very key head and shoulders area. I do not think this is the bottom on Peloton. We broke down from the 236. If we touch $71 or $70, I would say, okay, maybe that's it. 382, we pump back up from here. They have recalled their treadmills. There's literally like dead kids and pets. And this thing had a massive move up, and it's exercise equipment market, which is traditionally like bubbly to begin with on its own. Like it's like trending type stuff. So, it came up from $17 and it's still at $89. So was that it? Is Peloton done retracing and now it's just going to go back to the moon? We're going to see Peloton back at $170? Yeah. I mean, I wouldn't bet on it. 200 exponential, we're miles below it. 200 simple, way below it as well. This is one of the weakest charts with a very bearish pattern at extremely bubbly levels, with everything technically and fundamentally going against it right now. Everything right now says Peloton is completely overvalued and it's going to go down and go way down. So I don't know, maybe now's the best time to buy, but it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I am not interested in Peloton. Matter of fact, I would be probably looking to unload my position near $100 if this even got close to back up to the top. I can't wait. I mean, I don't want to say I can't wait. I hate for anybody to lose money, but I can't wait to look at some of these charts a year from now. I am legitimately excited to see what a lot of these charts look like a year from now, because I have a feeling some of these are going to look nasty. And Peloton, might be one of them. Walmart, I mean, we talked about this for a while. I didn't like how any of this action was looking like. And what was I expecting? What was the trade I wanted? The gap fill to the upside, and not the long gap fill, the short gap fill. Well, we didn't even get up there. We didn't close the gap completely. But, if you took the sell off at 142, we're back down now doing exactly what I said. What I was expecting was us to come up here, fill the gap, and then break down from it back inside of the pattern, and this to be a failed breakout. And we put the long trade in here and said, if it comes back down, consolidates, and then starts showing strength, yeah, maybe I'll be bullish on Walmart for new highs. But it literally did exactly what I expected it to do. It basically came up here, tried to fill the gap, showed weakness, couldn't fill the gap, and now it's back inside the range. Well, when something gets a failed breakout like this, or like a throw over, where it breaks out of a clear range, consolidates, and then fails to continue in that direction, it typically will come back down and show extreme weakness. So now we're back inside the descending broadening wedge, and the bottom of the wedge is down here at like $115. So, I mean, it's not that huge of a move percentage-wise from where we're at right now, but, it's still, I mean, 20% to the downside? I mean, do I expect it to just, put in a giant red candle to the downside? No. Is it possible? Yeah, over, probably a couple weeks or something like that. But, again, it just broke down from its 200 exponential and simple moving average. When we see a bunch of different stocks or cryptos or assets or whatever below their 200 exponential simple moving averages, and now the slopes are flat to down, that is extremely bearish, because that literally, you have programs in the markets that all they do is just buy the 200 exponential and simple moving averages. So when price comes down to it, they just buy off it, buy off it, buy off it, buy off it. Well, if you come down below it for too long and you retest to it and then it fails, like it acts as resistance instead of support, those algos eventually flip, and then they just sell the 200 exponential moving average and then wait until we're back above it and it's slow back to the upside, and then they go bullish again. So if we're potentially having algos right now flipping in all different spaces to bearish or neutral or sell or short or whatever the situation is, depending how aggressive they are, that's extremely bad. And when the sentiment shifts, especially after what's taking place here, I mean, I'm not saying we're going to have a double dip recession, but could we have a double dip recession? Could we have a depression? Do we have massive bubbles inflated by the Fed? I mean, I think so. But, we'll have to see how it plays out. So, ARK, here is the innovation ETF, ARKK. I mean, I've warned you guys about these. I'm not going to keep getting into them. All the ARK funds look like crap. I saw that stat earlier where it's like over 50% of people that invested in ARK are now upside down. So the outflows are at record levels. Kathy Wood just got on the other day and did an interview and said, I'm more bullish now than I ever was. Well, I would rather be more bullish with capital to deploy, not massive outflows coming from my fund. It doesn't even make sense. You're down from $160 and you're at $100 now. And now you're more bullish than ever? Oh, God, that's hilarious. Let's wait till we're not making new lows, and then we can talk about how we're more bullish than ever. We just broke down from a very bearish pattern below the 200 exponential and simple moving average on all of the ARK funds, basically. And now we're more bullish than ever. now that we're below the 200 exponential and simple moving average. Okay, Kathy. Okay. I'm not into that funky stuff. Don't try to pee on me and call it rain. You got to be an idiot. More bullish than ever. Okay, gold. We got the breakout on gold. We got rejected by a 200 simple moving average. Still looks bullish. Got the 821 cross. We're now above the 200 exponential, in between the 200 simple. I'd call this more neutral than anything, but I mean, you could say we're bullish on this. Like, we broke out of a very clear pattern, this like descending channel right here. But again, I want to see us above this purple, resistance here. I want to see us above this topping pattern right here. I want to see us above both 200 exponential and simple moving average and then angled to the upside. I don't want to see this situation again where all of a sudden we just capitulate and pull a Walmart. I don't want to see the Walmart move right here where we just go, oh, just kidding, and we're right back inside here. This should act as a very strong support, 1740. It's the top of the channel we broke out from. It's the bottom of this long trending green support line. But look, if that breaks, y'all going to be like, damn, you were right about 1600. Damn, you were right about 1470. Damn, you were right about 1350. I mean, we'll have to see. Everybody's worried about inflation, and the whole world is capitulating in markets and assets right now, dumping everything, worried about massive inflation because their gummy bears cost an extra 10 cents and fuel went up by 20 cents, or it's 50 cents over where it was last year. It's not even at all-time highs, first off. So why are people so afraid if everything's not making all-time highs? Fuel is still way down, all these energy stuff way down, a lot of like the metals, silver, platinum, not at all-time highs. But now everybody's so worried about inflation all of a sudden. This was our big inflation scare move. I mean, maybe it's yet to come. Maybe we get that move back up for the triple top up here at 2000. But, it's like all the gold people have been arguing for years now. I mean, if this isn't the thing that sets it off, if gold doesn't go up now, is it ever going to go up? I mean, yeah, eventually. But when nobody's looking at it. I think when everybody's worried about it, everybody's talking about inflation, everybody's excited for, oh, this is it. The whole system's going to crash. And this is the move we get. I don't know. That doesn't excite me. It makes me think that maybe I'm going to be right about this and that the inflation is, me and Jerome Powell actually will be right that the inflation is transitory, that what we actually need to see is high levels of employment and higher, wage earnings. Like people have to legitimately see wage inflation for there to be legitimate inflation. Because in order for there to be actual inflation, what that means is there's more buyers than sellers, which means that all of a sudden there's more demand for products or there's not enough supply for products. So we've had more demand for stuff because of trend changes. More people want zoom and camera and all this type of stuff because the markets are shifting. More people want, rental cars because they don't want to go on planes. More people want used cars because there's not enough new cars because there's not enough semiconductors. Like, those are all extra demand issues. Well, if we all of a sudden just everything was fixed and all the factories were back open and everybody was producing everything and all these supply chain issues are fixed and there's no pipeline hack and everything's just back to normal and there's no stimulus from the governments around the world, there's no more extra this, that, and the other, is there still the same amount of demand? Is there still the same, if the supply came back, is there still the same amount of demand? Because I'm not sure there is. And if there's not the same amount of demand, if all these people don't go back to work, and then now on top of the same amount of debt that they have out, same amount of borrowed money that they have out, on top of all that, they're making more money too, which is driving that up. We're not going to see actual real inflation on the macro. So I'm still not convinced that I'm wrong about this whole inflation issue. And once again, I think we could see inflation for a little while and then eventually go into a macro like depression or, deflationary period. This is all to me right now. All of the stuff we've seen so far is reflation. We had a big bubble. There was holes in the bubble because of the governments, because of the, big V, because of all this stuff, there was holes in it. Supply chain and breakdowns and this, that, and the other, and transport costs and all this different stuff, policy changes. and there's all these holes in the bubble, and all we've been doing is trying to fill the bubble back up to where it was before. So the prices of stocks have gone back up and filled some of those bubbles, but nothing else is back to those same levels. So that's unsustainable. It's divergence between reality and asset prices. So eventually what happens? Well, we either go sideways long enough that reality catches up, or asset prices come down. So what's that tell you? Silver topping out once here again. Didn't even make it to the top of the channel. I want to see this back at 30 bucks, showing some strength. It's going to do what gold does. It's slightly more bullish than gold, but I'm not seeing anything out of silver that's making me think like anything's changing. Silver gold chart, this is same type of situation we broke out of, a very clear pattern. Got to push up here, but now here we have another resistance in place that's very clearly pushing us down. If we do get the breakout and the move up, what's this mean? You're going to need a bunch more silver to buy 1 ounce of gold. But maybe it fails and we just sell back off to the downside. Eventually, I think this chart goes way lower, but theoretically, fundamentally, technically, this should be bouncing to the upside here. But, again, this is just going to be heavy pressure from this trend line, and it's just going to keep pushing us down. But what this tells me right here is if we do get the break to the upside, if this chart plays out correctly, if we get a massive push up on this chart, it tells me that gold is much more valuable, much faster than silver. So that means that either gold is going up and silver is going up less fast or lower percentage, like daily, or more realistically, because silver usually outperforms gold with moves, but sometimes not initially. But realistically, what this tells me most likely is going to happen is this tells me that gold and silver are both going to go down, and silver is going to go down much faster, because that would cause a breakout in this chart. So again, maybe this is wrong, maybe it fails, maybe it sells back off, but this is telling me that gold may be topping out and silver is going to sell off more violently. Platinum chart topped out at the top of the range again. I mean, it's respecting this channel literally to the T, to the dollar. We're bouncing around. We're coming back down to the bottom. What do I expect to happen when we get to the bottom? I expect us to find support inside the blue box. Looks like a buying area to me. We have very clear support on platinum, for month after month after month. It's operating perfectly inside this channel. It is operating perfectly in, this 5-wave, Elliott wave structure. We could very easily see platinum break down to $1,000. We're at 1,200 now, but if you were going to ask me, do I think platinum goes below 1,000 or up to 2,000 sooner? From where we're at right now, it's $200 to the downside and $800 to the upside, and I would say there's probably a 50-50 probability. And I would more likely say platinum will be at $2,000 than below $1,000 in 6 months. But again, we could easily break down from here, consolidate, and then go to 2,000. But we're at support. This thing looks pretty bullish overall. Not at all-time highs, especially not in relation to gold. We'll have to see. Uranium, we hit our key level finally after falling short a couple times in a row. We had some bearish divergence. It played out. We now have gone to a new high. This is the URA fund ETF. I mean, these things have gone up so much, and this is such a slow moving asset. It's not unrealistic for me to think that this is going to be a throw over and we're coming back down to like $15 or something like that. UEC, same thing. This one is actually slightly weaker because it didn't put in a new high here. Here we put a wick high, here we put a close high, here we put a lower high. This is obviously a situation where, once again, I think the 3 is topping out. We're coming back down for a 4. Massively bullish in the long run, but right now, uranium does not look good. It looks like it was just a little too full. Same with the crypto trade. It looks like it was a little too full, and now maybe some of the gas coming out of the tank. USAS, key resistance, broke down from it, broke up from our little pattern right here, failure, come back down extremely violently. We're back down at the bottom of the channel, at the bottom of the range, back down at our key buy area. I don't expect this. This is a gold and silver corp. I don't expect this to do anything until we see gold or silver breaking out and moving up. I don't expect this thing to start all of a sudden being extremely bullish. It's much weaker right now than gold or silver is. So if they start going to the upside, I expect this to outperform them. But if they keep going sideways or start going down, I expect this thing to get absolutely wrecked. Silver junior miners, SILJ. You know, this, we wanted to see this on the weekly outside of the key resistance right here. We're outside, we're consolidating. You know, this is what I wanted to see, was a weekly close above that line. The daily had closed above it and got rejected a few times. Could it still be a fake out? Yes, 100%. Could still break back down, fail, come out the bottom easily. But again, I think this is just going to do, it's just going to exponentially mirror whatever happens in the actual silver market. If silver breaks out above 30 bucks, I think this thing goes parabolic and it looks great. If it breaks below, you know, or back down into like that $22 to $24 range, I think this thing's going to get crushed. I mean, but we really just got to see what the underlying do right now, because that's all they're, you know, sometimes those miners will just like move in advance, anticipation to the upside or to the downside, but sometimes they'll do that and they're still wrong. So, you know, you could easily get faked out by a miner because it moves premature. THCX, this is a Spinnaker cannabis ETF. It's new lows. You know, we broke down from a key support area to a new low. We're at 200 moving average. Once again, just pay attention to how many of these things are at the daily 200 moving average or below. There's a bunch of support right here, couple key moving averages, but we're breaking down from key levels here. You know, I started dabbling in some of these pot stocks and cannabis ETFs, but, you know, we talked about this specifically. It is not unrealistic for me to think that some of these cannabis stocks could still have like a 30% pullback before moving to the upside. But I'm massively bullish on them on a longer time frame. YOLO, same thing, another cannabis ETF. You know, we got that fake out, failed breakout, never crossed 821 back to the upside. We're at the 200 exponential, 200 simple, and 377 are right below us. You know, same thing again. This thing could easily lose another 20, 30, whatever percent. We could pop down below 200, find support in like that $15, $16 range, and then move up. Maybe they just die. I don't know. I doubt it. But Tilray, you know, it's at that key support level. We got this blue support right here. It's been playing out perfectly. Every time we get down to it, we get a reaction rally, but every time it's a lower high. So do I think all of a sudden we're going to go to new highs? No, I think it's going to keep doing the same thing. We're now below the 200 exponential, and 200 simple moving average is just below us. You know, again, I'm dabbling a little bit in some of this stuff, starting to dip my toes in the water. We're now at 1450. I mean, I think I specifically said I could see this thing coming down below, like down to like 10 to 15 bucks, like easily. So, you know, all this area looks like a buying area to me long term, but I mean, we could easily see more drawdown. ACB was overall more bearish than everything. It was starting to like consolidate a little bit, looking like it was trying to carve out a bottom, but you know, we're still looking at that inverted head and shoulders, that massive pattern. You know, once again, we're at like 771 right now. You know, I'm looking as $7 as a buy opportunity. You know, I'm looking at $5 or lower as like an, oh shit, this thing might be done. So as long as we don't take out that low, take out that head, can I still be bullish on this? Yeah, it looks like we're carving out a bottom, but I mean, you could argue that we've been carving out a bottom since May of 2020. So, I mean, at what point in time does this thing break in one direction or the other? I think it breaks to the upside. This is a very bullish pattern overall, but could it fail? Of course, definitely could. But I mean, I'm looking to accumulate at these levels. I mean, I think this thing goes back to 30 bucks easy minimum in, you know, the next couple of years, if not much shorter time frame. So anywhere from like, you know, $4 to $8, it looks juicy to me. Now, if we get down and take out that low right here, I don't know. We're still below 200 exponential and simple. They're both going to the downside. You know, once again, this looks bearish to me overall. I'm bullish on the space. I'm bullish on a lot of these stocks, but you know, it's just about picking bottoms at this point in time. Do you really want to pick bottoms, or you want to just wait? What the fuck is going on? I don't know what the hell is going on with this shit. Caterpillar is next. CAT, you know, maybe topping out here. You know, we're up at that key resistance. We hit the key level that we're looking for, but again, we've been inside this channel for quite some time now. Every time we're at the bottom of the channel, it's a great buying opportunity. Every time we're at the top of the channel, great selling opportunity. You know, we're potentially going to come back down, test it again. We're putting in all-time highs. Massively bullish on Caterpillar. one of the few charts in existence that actually still looks good. We are well above the 200 exponential and simple. Does that mean we can't come back down here and test them like literally every other chart is doing? No, we could easily come down to $200, but we're only 10% up from the 200 exponential and simple moving average. A lot of these like stocks and cryptos, have gotten like 50% up, 30% up, 20% up. So even a heavy retracement in Caterpillar, I'd still be massively bullish on. And I look at this one as like, long game play. So, but I think that's it. Blew through everything. I'm trying to keep these streams closer to like 1 to 2 hours maximum, just to keep it a little more like watchable and also like, quicker for myself. So good to see you guys in chat. Welcome everybody. Good to see everybody showing up here. Appreciate the love. Our kits, good to see you. Icing on the top, Elon tweets Tesla will not be taking Bitcoin as payments due to energy costs. Really, I did not see that. It does not surprise me. I still think that whole situation, like we were just testing liquidity. I think that's bullshit. I think it's laughable. What's up, Bubblies? Good to see you, man. Bubbly says, what's your view on flight shares at the moment? Like, are you talking about airplane stocks or like the ETF? I'm not sure what you're talking about. I have no interest in being in airlines. I think there was definitely a good airlines trade, but I have no interest in them because I think that whole space has changed. I don't think that it's the same as like the real estate space right now. We're seeing a lot of volatility and we're seeing moves, and there's definitely money to be made in real estate, the same as there is in airlines or cruise lines. But like, I don't know if it goes back to where it used to be at. I don't know if business travel comes back. Therefore, I don't know if airlines ever get as busy as they used to. I don't know if people get tired of being packed in airplanes with each other and would rather rent a car and drive or buy a car and drive wherever they need to go. I don't know if cruise lines come back the same way. I don't know if it's like commercial real estate. I don't know if commercial real estate comes back the same way. I don't think we need these big office buildings where everybody comes in. I think people will use Zoom calls. I think if you have a company with 1,000 employees and instead of having all 1,000 of them come in every day, you can have 500 of them come in Monday, Wednesday, Friday, and 500 of them come in Tuesday, Thursday, Saturday, or not at all, or only half of them come in, or whatever the situation is. I think there's definitely like room for potential changes in the industry. Therefore, I don't know that they ever get back to their previous all-time highs, especially not anytime in the near future. Now, whenever you have one of these moments, like these industrial revolution type moments, which is what I consider this, is like a technological revolution or like just a way of life revolution, after like a year of people being in this situation, they're going to reevaluate a lot of things. So I really think that this is the thing about a recession versus a depression or like a revolution situation like this is that it changes the way you think. So if markets are like a confidence game, once people change how they think and they're not just overall always bullish on the economy or all on the government or on the markets or whatever, they act differently for like generations, sometimes for the rest of their lives. So there's a lot of these situations where things that worked for 30 years or 20 years or 10 years might not work anymore. I don't know that people are going to ever get back into the levels of debt that they were in before. Maybe they will, but I don't know. I think a lot of people are probably thinking twice about massive credit card debts, or do they need to have like a new car every year, every couple of years? Do they need to fly everywhere to shake somebody's hand, or go on a golf trip, or, whatever the situation is? I think people are reevaluating a lot of stuff. I think there's going to be massive changes in healthcare industry, massive changes in childcare industry, in like schools and like teaching and everything. I think there's going to be massive changes in, corporate real estate, in retail. Like, I guess that kind of falls in the same category. Transportation overall, like airlines, rental cars. Like, I think we really got to just see how a lot of this stuff plays out. I mean, you can get ahead of it a little bit, if you want, or if I want, I can get ahead of some of this stuff. But the truth is like, typically when I use technical analysis, I'm looking at like previous experience or like what's happening in the charts, like technically telling me this is going to happen. Fundamentally though, like I mean, anything could happen tomorrow. Like, you know, fundamentally, like there could be complete shifts in these markets. Like, you know, it's the same as like the minimum wage situation. And, you know, okay, yeah, you want $15 minimum wage. Well, maybe we lose like 5 million jobs now because some new robot technology comes out where everybody just orders at the gas station, like at the pump where you have like touch screens and you order all your own food. And now no McDonald's even has employees. Maybe there's like one guy who goes and checks on like the robot arm and makes sure like the machines have like change to give you after you place your order. But like maybe they go full automated and like you don't have, you know, there's just like fundamental and technical like shifts in all these places. Like I think we're at a key point where if you're even involved, if you're even interested, if you're taking any interest in markets or the shifts that's happening like in the financial system, in the business world, in like technology and banking and everything, I think that you're probably going to be very well off a decade from now or 20 years from now. If you're listening to this right now, I would bet money that 20 years from now, if you pursue this hobby or this lifestyle or whatever, that you will be a millionaire. Because this is a key time, and just being even paying attention right now to what's actually going on, you're so far ahead of the herd and of the trend that even if you don't get on this, that, or the other, even if crypto didn't make you rich, even if stocks didn't make you rich, there's going to be something out there that you're going to be able to get a piece of that's going to take your game to the next level. That's my opinion, and a little tangent there, obviously, as well. So Gemini has crashed. Yeah, it doesn't surprise me, man. It with this kind of volatility and stuff like that, these freaking exchanges, there's no excuse for them. They have made billions of dollars. Their valuations, their stock prices, their fees, they've made so much money. If they want to make it so there's no way that they crash, their site crashes or their exchange crashes or whatever, they can't. They either don't care or they do it intentionally. I think it's probably a bit of both. Because if they crash it at the right time or suspend trading or logins at the right time, they aim to profit massively off of it. Because all they have to do is wait for price to like settle back out, and then they can like make the spread basically. So, you know, not to be like super conspiracy theorists, but you know, oh look, a bunch of volume came in and there was a bunch of stuff going on and that's why it crashed. Well, okay, buy better servers and then it doesn't happen again. Well, when it happens every single time there's volatility in the markets, that tells me you're not trying to fix it. That's like if you cheat on your girl and she's like, don't cheat on me anymore. And then you're like, yeah, okay, I won't. And then you just cheat on her again. And like it happens over and over again. Eventually, she's probably not going to believe that you're going to stop cheating. She's probably just going to be like, this dude's just going to cheat on me. So fuck it. I feel like that's the same way with exchanges. If the thing crashes every time and they're like, oh, this happened and made it crash. This happened and made it crash. Every time there's like massive volatility and potential where you'd want to enter or exit a position, you know, that strikes me as just like, you know, it's lip service. Like, don't tell me, show me. So I think, honestly, there's no excuse for it. Not for any of the mainstream exchanges, at least. I don't think Kraken, Coinbase, Gemini, or Binance, or a lot of the other ones as well, I don't think they have any excuse not to have adequate servers or personnel if you try to contact them. If you're not able to trade on a trading platform, then it's either on purpose or it's a shitty platform. So one way or another, they're either treating you like shit or their company is shitty. So either way, it's still shitty, in my opinion. Bubbly says, how about the urge of people wanting to go on holidays overseas because everyone's dying for that? Yeah, for sure, man. I totally agree with you, Bubblies. The only problem is that, you know, somebody made this analogy. I can't remember who it was. Maybe like Jim Rickards or something like that, who's an excellent author. I highly recommend his works. I think it was him. He did an interview, and he said, here's the thing, though. He was talking about the pandemic shutdowns and everything. He goes, me and my wife, we go to dinner once a week. Every week we go out to dinner on like a Friday or whatever. So like a year goes by, we don't get to go out to dinner because everything's closed, or we're trying like not to die if we're afraid, or whatever the situation is. So like we're itching to go out to dinner and we can't wait to go out to dinner. And this is like a parallel between what you just asked, which is why I'm using this example. You we can't wait, and we're itching and we're scratching. And we're, oh my God, I can't wait. It sounds so good. My steak's gonna be so good. Like when you go out to dinner though, finally after missing like a year's worth of dinners, 52 weeks you wait, you don't go out to dinner, and then you finally go out to dinner. Maybe you order like an extra appetizer. Maybe you order a couple extra sides. Maybe you order 2 meals and you go like full hangover style and just get like, a steak and pork chops, knowing you're not going to be able to eat it. But you don't go out and buy 52 meals all at once. You don't buy 2 extra, 2 meals every time you go out for the next year, for yourself and 2 for your wife or whatever to make up for it. Like there's extra demand, maybe people that weren't necessarily worried about it, but you don't give back all the demand that you missed along the way. And I feel like international travel is the same way too. There's people that are itching to go travel internationally. There's people that travel for business. I've got a buddy who travels for business like internationally, like, 6 times a year, 3 times a year, 12 times a year. Like I don't think he's just all of a sudden now that once you can internationally travel, I don't think he's going to be going like 3 times as much for the next 3 years to even out for like the lack of international travel. I think it's literally one of those things where you like really want it and then you go do it once and then you're good. Well, if you were going to travel internationally once a year for 3 years and then you go 3 years without traveling, I don't think you just go 3 times in 1 year. I don't think you get back that demand. And supply is the same way with that, with a lot of stuff as well. And I think a lot of economies, like, if you're living on tourism as a country or as a city or whatever, like there's a ton of tourism where I'm at. Like they don't just get back that extra tourism when everything goes back to normal. You might get back some. There might be like a burst all of a sudden. There's like huge demand for international travel. But I don't know that even if it goes back to normal, I don't know you ever make up that difference. Even if we have 1 million people internationally travel every year, I don't know that all of a sudden afterwards we get 1.2 million because we're making up for all the people that didn't travel. I think we probably just go back to like 700,000 or something like that. I don't know we even get back to that same level, let alone go above it. Or if we do, I think it'll be like transitory, Jerome Powell style, where maybe we get a surge in travel and then it goes back down to like normal levels. So, but again, that's totally my opinion. And that's my point kind of too on, a lot of these trends and everything is we have to see like, is there a legitimate market shift? Is there less worldwide international travel because people's mindset has been changed where people are now like a little bit more like just nationalists? Because we're already seeing that in like supply chain and like manufacturing and stuff like that. Like we have for years, for decades, not just the United States, but the world has sacrificed resiliency for profitability. If you could make, all your medical equipment at home, and then if there was ever a pandemic like this, you have everything and you don't have to rely on other countries, that's resilient because you can make everything yourself. But if you want to make everything cost effectively and you want to make the highest profit margins and you want to make the most money, you ship, all those jobs to China, and then they don't have the same labor laws. So Chinese slaves make it, or Muslim slaves make it, or whatever, like the Uyghurs. They make all our stuff super cheap, and then we get it. And it's like, well, did slaves make it? Yeah, but we didn't see it. Like, we didn't break any laws, and our business is the most profitable. So that's like basically profitability and versus resiliency. So now I think like nationalism kind of brings it back. It takes us away from like this whole globalization. The trend leading up to this was globalization. Like, make it wherever, but make it cheaper, and then our profits are bigger, and then we're a better company. But I think now we're going to go back in the opposite direction. I think we peaked on globalization, and now we're going to go back down, and we're going to have a multi-year trend towards nationalism, and then eventually we'll peak on nationalism where people will say, okay, it's ridiculous for us to make all our own steel or only use all our own oil or manufacture every semiconductor that we need inside of our country when we're paying so much more. Like, this is another perfect example. Yeah, it's like a conspiracy until it comes right, Tahid. And it's like, gee, people called me a conspiracy theorist, a decade ago, and now how many of those conspiracies have come right? So were they really conspiracies, or were they just theories waiting to be proven, or facts that hadn't yet been released? Like, I totally agree with you, dude. Too many to be a coincidence. Too many conspiracies come true. And realistically, a conspiracy is basically just an idea that hasn't been proved, like, right yet. So it's technically not like coincidental that there's a ton of conspiracies, but the difference between the believability of a conspiracy theory is, like, previously I used to hear a conspiracy theory and think, oh, that's like a 3% chance that that's true, 97% chance that, you know, the world is probably not flat. Now when I hear like conspiracy theories, you know, an educated one, or at least a decent one, I think that's probably got about like a 25 to 30% chance that it's actually not a conspiracy and it's just the truth. But regardless, though, oh man, I was right about to make one more point about the trends, but I can't remember what it was. CW, what's up, man? He said, I think it's safer and easier to travel locally to vacation than to go internationally with the possibility of total loss. Yeah, and there's so many different aspects to it too, CW. That's a great point. Is, you know, essentially, if you normally take 2 vacations a year, and one of them is like locally, and one of them is internationally, if all of a sudden you didn't get to take a vacation for the whole year, you know, do you now take the international vacation? Or is all of a sudden the fact that you didn't get to take a vacation make the like local vacation so much sweeter? And you think, oh man, it's just going to be so good to go out. It's not worth all the extra hassle to go overseas. I'm not that worried about it when I haven't gotten to, like, so it changes like the mentality of how people think. And then maybe you go a couple years, maybe you went overseas every year, international travel on vacation with your family. And then you took a couple of vacations in the States for a weekend or a week or whatever, wherever you're at. Well, if you don't go for a few years and you've been going for 10 years, how many years of not taking an international vacation before now you're no longer in the habit of it? So it's not even really like that relevant anymore. So maybe you lose like 20 or 30% of international travel like permanently because people just aren't that worried about it anymore. Or maybe they're just think, man, it'd be really nice to get around over here. Maybe it's not worth the extra hassle. Or maybe the prices go through the roof. Maybe international travel goes up 30% in price, you know, a couple of years from now, or 50% or 100% because there's not as much demand for it. Therefore, like, you know, they have to charge more. I mean, there's so many different factors that can affect all this stuff, and why I think it's so important not to just assume you know what's going to happen and what the changes are going to be and, you know, how the economy is going to look or anything. That's what pisses me off about the Fed is they're like so cocky and so like convinced that they're like, oh, this is all transitory. We're right. Like everything's good. Well, every single professional like in existence that knows anything about like markets, economics, like anything is like, okay, Fed, what are you doing? We have a massive housing bubble going through the roof and you're still buying ridiculous amounts of mortgage-backed securities. You know, we have all this other stuff going on, like all-time high asset prices, like across the board, but you're still pumping out money into the economy. You're still buying back treasuries. There's like so many different things that it's like, damn, y'all are so afraid about coming out and saying something to crash the market that you're going to end up crashing the market because you couldn't just like be honest with it. It's like if you ever been in a relationship where it's like somebody like doesn't want to tell you the truth about something because they're afraid of the consequences. Well, if they finally like tell you the truth about something and then you yell at them and scream at them and ground them, like if your kids like lie to you and say, well, I didn't want to tell you because I was afraid I'd get grounded. Well, yeah, of course you're going to get grounded. You know, you skip school or whatever, or you didn't do your homework, or you failed a class. Of course you can get grounded. But them being so afraid to tell you the truth just causes more problems because it's like, well, now, why didn't you tell me that you failed your class? Well, I didn't want to deal with the repercussions. So now you got kicked out of college and because you didn't have a high enough GPA, or you lost your scholarship because you didn't have a high enough GPA. So now you're no longer funded. So now you're no longer in college, all because you were afraid to just tell me the truth. Well, if you told me the truth in the beginning, you would have got in trouble. You would have got grounded. You would have got a tutor, you know, retook that class and passed and still be in college. But instead, you're so afraid of what's going to happen that eventually you like fail out of college, get kicked out, can't get a scholarship, end up working at like Denny's as a dishwasher for the rest of your life. Like, no offense if anybody here is a dishwasher at Denny's. I apologize. But just as an example, not really. If anything, I'll high five you because I'm proud of you. But, you know, because you're here learning while you're working at Denny's as a dishwasher. But my point just being is that, you know, it changes the whole situation. Like, it's so hard, I think, for people to understand like the big picture of what's really going on with so much noise. And when you really like zoom out and you look at everything and you look at the situations and you look at what's happening and you look at it from like a non-biased situation, you think, wow, should I have just took the initial punishment? Was it worth all the lies built on top of lies? Was it worth, what would happen if they said, we're thinking about starting to taper a while back? Maybe we see a couple percent market sell off. Maybe we see a little dip in the markets, whatever. But we don't have to crash. It's like, well, we're just tapering a little bit, or we're announcing that we're thinking about tapering, or in the future, we're probably going to taper, or maybe their yield curve controller, whatever it is they're afraid to tell us about. Like, you don't have to like ruin your whole life and get kicked out of college and flunk out of school and never get a good job, all because you were afraid of the consequences of just saying that, you failed a test that leads you to failing a class, that leads you to losing a scholarship, that leads you to getting kicked out of school. Because that's what's happening right now. That's like, and people are coming out recently and saying like, look, U.S. is going to lose its status as world reserve currency if it doesn't quit doing this shit. And it's super obvious to me. Now, the real question is there a possibility right now, if they got their shit together, that they could keep their status as world reserve currency? And that is the real question. Because realistically, I think it's just a matter of time. I think in all reality, the U.S. will lose its status as world reserve currency. I think the question is it 5 years from now? Is it 10 years from now? Is it 20 years from now? Is it 50 years from now? That's the question. Because I think in all reality, like the whole fiat system, U.S. world reserve currency system, it's limited. It's never going to last. The question is just how long does it last and what causes the acceleration? Because in my opinion, if they keep doing what they're going to do, maybe we got 5 years left. If they get their shit together and all of a sudden stop acting crazy, maybe we get 20 more years out of it. I don't think so. I think more realistically, it'll be like within 10 years, there will be a new world reserve currency or basket currency or something like that. But again, anything could change in the next 5 years that could accelerate or decelerate that trend. So, but we'll have to see. I mean, that's the beauty of what's going on right now in all these markets and in reality and in the economy and worldwide. And the benefit of being interested and paying attention to all this stuff right now is that in all reality, if you're even paying attention right now to what's going on and you're not just one of the masses like going about their life, like just mad because gas went up 15 cents and they had to wait longer in line. Like, who gives a shit? Let's pay attention to the macro. How are we going to make our life better in 5, 10, 20 years? How are we going to make sure that we're sipping Mai Tais on a beach while the world burns? Like, that's what I'm worried about. I'm worried about how we're going to all do better coming out of this situation. Because it's an absolute fact that during market crashes, during economic breakdowns, during this stuff is when companies are built, when wealth is built, when opportunities really arise. Like, you're only ever going to do so well in a market that always goes up, because you're never really getting like the same pullbacks. But when you get those 50% market crashes, when you get like shifts in like the actual economy, shifts in like the actual world in technology and industry and in all this different stuff, that's when you really can make like legitimate wealth. Like, you can go from being just, regular guy, average Joe to a millionaire, by just busting your ass, making a new company, buying into an asset at the correct time, etc. And a lot of crypto people, I think, are like reaping the rewards of that now. Like, we were patient through the bear market and believed in something when nobody was paying attention to it. Like, I remember when crypto total market cap got down to like, I think it was like $80 billion or something like that. Like, it was super, super low. And now here we are at like, what, 2.2 trillion? I mean, that's like absolutely nuts. That's like over 25x on like the entire market cap of the space. So, you can go from having, a few $1,000s or double digit thousands to like millions in situations like that. It's just a matter of being in the right place at the right time. And I think this is what leads to it, is education, like not only in bear runs, but in the bull markets too. And, like I said, there's so much could happen in all this spaces, so much can happen there's just so much potential. And if you're interested in real estate, in, hard metals, digital assets and currencies, all that stuff, I mean, it's hard to think that you're not going to like have better daily, weekly, monthly, yearly decisions, and that those decisions are going to eventually end up to you being in a better space. Because that's how I look at it. Is like, maybe you're not rich next year, maybe you're not rich in 5 years or 10 years, but in 25 years, you're probably rich if you're interested in this type of video and stuff right now. Like, maybe it is 2 years. Maybe you invested in Dogecoin and you're already rich. I mean, that's, who knows? I mean, but that's what it really comes down to. Is like, there's always a million different opportunities. And, when you watch one play out and you don't get a piece of it, or you get a small piece of it or whatever, you always think back and think, damn, I wish I would have, oh, if only, like that hindsight, like, damn, I'm never going to get an opportunity like Doge again. There's going to be another opportunity like that. And the more times you see it, and the more times you see it play out, the more ready you can be when you do see an opportunity like that. And if you diversify, eventually you're going to catch a piece of one Dogecoin or one Tesla or one Ethereum or whatever. And, after that, you don't have to be lucky. You can just be consistent. That's what it really comes down to. And I think there was one other thing I wanted to touch on. Not the fuel supplies, not the pipeline situation, not the markets. Oh, man. There was one other thing that I was wanting to touch on, and I can't think of what it is off the top of my head. So I'm probably just going to call it there, and maybe I'll throw it in the next video on Friday or whatever. We'll look at our like Friday market week wrap-up video, probably around like, let's say like 3 to 4 or something like that. Maybe 3:30, 4:30, depending. Somewhere around there, Eastern Standard Time. I'll try to think what it is, and we can go from there. Can't think off the top of my head what it was. But there was definitely something else. What was I going to talk about? Let's look at Bitcoin real quick before I get out of here. Yeah, so we found some support here. Obviously put in a pretty bullish, pretty decent amount of bullish price action. Maintain a slightly higher low on the daily right here. I still don't love how this looks. But again, typically when you see these big wicks on the bottom, it's priced like bottoming out. This still has an entire day to play out though, so I'll be looking at shorter time frame charts obviously in the meantime to see what it looks like. But and we came down to the 89, we hit a key fib level. This looks like a legitimate good pullback from right now. What we need to worry about is Stochs are rolling over, multiple red histograms in a row. This legitimately looks like this continuation could and probably will continue. So that's what I'm paying attention to now. And then, once again, we're at those key levels where, basically, are we getting just a reaction rally? And then actually the selling is going to start taking over, and this is going to start rolling back over to the downside. We already crossed that 821 weekly or daily. I'm sorry. We got a bunch of weekly traditional market 821 crosses. Again, we would expect to see some price action at the zero zone right here. We would expect to see like all this stuff happen. The question is like, is this going to be a sustained price action back to the upside and then continuation? Or was this just a reaction rally off of, what works out to basically $10,000 worth of value? I mean, this thing was the Bitcoin topped out yesterday at $58,000. And now we're at, 50,000. We went down on, this is the traditional market Bitstamp chart, went down to 45,000. So we lost $13,000 in value in, a day and a couple minutes, basically. So, yeah, God bless you too, Bubblies. Tahid asks, what's your thoughts on crypto loans? There's smart ways that you can handle the crypto loans. Okay? And I totally get why in the early stages of a crypto bull market, especially, that you would want to take out crypto loans, because it's basically just leveraging. You're basically just leveraging your crypto. You're like, oh, here, hold my crypto and then loan me money and my crypto is collateral. That's really all it is. So it's the same thing as using leverage like early in the cycle. But what you have to be careful of, in my opinion, is going into a bear market. Because if you have a crypto loan in a bear market and then price dumps, you better make sure that you don't get margin called and that they end up taking your crypto. Because the idea is that you believe it's going to be worth more in the future. And, in my opinion, the reason I would take a crypto loan out is if I wanted to take out a loan on my crypto because I didn't want to sell it, because I didn't want to realize capital gains. That's why that would be my motive of taking out a loan against my crypto. I would say, here, hold my Bitcoin, loan me, money that I can live off of, and then I don't have to sell that Bitcoin to live off of that. Because essentially, if you bought Bitcoin at $10,000 and it went to $50,000 and you sold it, you would have to pay capital gains taxes on that $40,000 you made. So you'd have to pay $20,000 to the government. So essentially, your $40,000 in profits is now worth $20,000 in profits. So if you look at it as like a net worth aspect, like by paying those taxes, by realizing those capital gains, you have lost $20,000 in net value. Like you're worth $20,000 less because you paid your taxes, basically. As where the opposite is the case, and this is like how people use real estate a lot of times, or just businesses essentially. Like, you basically say like, okay, I don't want to sell that crypto and lose $20,000 in net worth. So what I will do is I will actually borrow against that. So you borrow $50,000 or $20,000 against your $50,000. So you retain all that initial value. You didn't lose the net worth value that you've accumulated through like the bull market. And now you actually have another, whatever your loan is, $20,000 or say whatever it is that you take out against that crypto. So you're like, okay, well, I still have the underlying asset, didn't have to pay taxes on it. And eventually one day, maybe I'll realize some of those capital gains and I can use that to pay back this loan. But in the meantime, I can use the loan for like working capital for like my life. So it makes sense to me. The idea behind it makes sense to me. And it's useful in situations where you can then use like profits that you make to essentially take out, to pay back that loan and not have to pay capital gains on the money because you're paying it towards a loan. So therefore it's like a tax write-off. So there's a lot of loopholes that you benefit through by doing that. But in the end, what are you really doing though? I mean, you're just prolonging paying those taxes. I don't know. It's a weird situation. It's a weird situation because it's the same thing as, okay, if I have, let's take that same exact situation too. If I have a Bitcoin that I bought at $10,000 and now it's worth $50,000 and I sell it now, okay, I have to pay that same, let's say roughly $20,000 on my gains, half of the $40,000 gains. So now I only have $30,000. So say I want to take that $30,000 now and I want to reinvest in Bitcoin and Bitcoin's still at $50,000. Well, now I only get half as much Bitcoin. So that affected my net value. But what did I really do? I just paid the same taxes that I would pay if I bought that Bitcoin at $10,000 and it went to $100,000 and then I sell it at $100,000. Now I'm paying taxes on $90,000. Well, if I would have done the same exact thing and paid those taxes initially at $50,000 and then ended up rebuying into Bitcoin at the same price and then it ran up from $50,000 to $100,000, I'm still paying taxes from the $10,000 initial investment all the way up to the $100,000. I just paid half of it like along the way and then ended up with less Bitcoin to make gains with versus not paying those taxes initially, ending up with still one whole Bitcoin that's now worth $100,000. And then when I sell that same Bitcoin, I pay those same taxes. And then if I go to buy back Bitcoin again, I can still only get back half of Bitcoin. So it's like really just a matter of, can you use it to avoid a taxable event or a taxable situation or somehow benefit from it? Can you use it to increase your net worth or not decrease your net worth by using the borrowing power of your assets as collateral, the same way that you would do with like a house or a business or something like that? Like as long as you can figure out a beneficial way to deploy that capital, I don't see anything wrong with it. It's just, in my opinion, using any asset as collateral to gain more purchasing power makes total sense. I mean, especially in, an inflationary environment. Like if we did get, let's say 25% inflation, let's say we do get, crazy inflation in the future. If 10 years from now, inflation is like 50% from the prices today, not like per year. But if 10 years from now, we average 5% inflation per year, like you can then pay back those loans with like barely any buying power because the currency has been inflated. So there's definitely a lot of benefits to it, but there's also like potential drawbacks. Like what if you're wrong and we don't end up in an inflationary environment, and in the future, everything is cheaper. So, you bought all these assets with all this money you borrowed. Like say you bought real estate or Bitcoin. Let's say you bought more Bitcoin with your Bitcoin. Let's say you took out $25,000, $20,000, just keep it the same. Say you took out a $20,000 loan on your Bitcoin when it's worth $50,000. Well, then let's say you take that $20,000 and you buy more Bitcoin. You pull the Michael Saylor, where you borrow more money and then buy more Bitcoin. All you really did was just lever up on Bitcoin. So, if Bitcoin goes up, yeah, you did well because you used more capital to make more gains, and then eventually you can pay it back with the gains, and you're net positive, and your value's worth more and everything. But let's say it goes the other way on you. Let's say Bitcoin goes down, and then eventually you get a margin call, and they say, hey, your Bitcoin that you bought at $50,000 with the borrowed $20,000 is now worth only $20,000, and then your collateral that you borrowed the money on is only worth $20,000. So now you need to put up more collateral, or we're going to just sell your initial Bitcoin and take our money back, and then you've actually lost that initial Bitcoin. So there's definitely still risk to it. There's risk to borrowing against your house. If you buy a house for $1 million and then the house goes down to $500,000, your loan might be more than the actual value of the house is. So you end up with a net negative. Or same thing if you take out a loan against a property you already have. You got $1 million house, you take out a $500,000 loan against that house and buy another house, and then both your houses drop 50% in value. Your $1 million house is only worth $500,000. You took out a $500,000 loan, bought a $500,000 house, it's only worth $250,000. So all you did was just lever up to the downside because you were wrong. So, I mean, I guess I kind of went in a tangent there, but, the idea is essentially just borrowing against any asset is essentially just using leverage. It's just a difference of, are you using leverage on your exchange and trading with leverage, or are you just letting somebody else hold your Bitcoin for you and then borrowing extra money against that Bitcoin? What is it in the end? It's just leverage. So what's your goal? Is your goal to, accumulate more actual wealth, accumulate more actual buying power, accumulate more actual Bitcoin? Is your goal to increase your net worth? Is your goal to, benefit off of like tax savings? Like there's just so many different options to it. And like, I'm not tax advisor. This is not tax advice. I'm not your financial advisor. Markets are extremely volatile. The whole do your own research, trade responsibly. There's also a lot of like intrinsic, like bad stuff to it. Like I like the idea of knowing nobody can come for my shit because it's all paid for and I don't owe it to anybody. But at the same time, like, what's the flip side of it? What's the flip side of, yeah, maybe you get to drive a nicer car in the meantime, but maybe you lose your job and then the car gets repoed because you didn't own it, versus just buying a car that you own straight up. There's so many different, like, other things. Like with crypto, I would rather store my own crypto on my own ledger and know that there's no counterparty risk, because that's like the point of Bitcoin. As where if you use something like BlockFi, and yeah, they're trusted, yeah, they haven't screwed anybody over yet, yeah, they haven't been hacked yet, yeah, they're like trustworthy. Well, what if you loan them your Bitcoin and then somehow they get compromised and they lose your Bitcoin and they didn't have enough insurance to insure the value of all the Bitcoin they own, and you end up in like a Mt. Gox situation? So for what, a guaranteed like loan on your Bitcoin, or a guaranteed 8% interest on your Bitcoin, or whatever, you now sacrificed your security, gave up your own central bank, like, ability to be your own custodian, and therefore like lost your crypto due to counterparty risk. People don't think about the risk to it. Like there's so many different ways to look at everything. And that's why it's so situational. I mean, even if I legally could or would, I wouldn't give people like financial advice or anything like that. But you definitely have to weigh the pluses to the minuses. I think like anything, make a flow chart, in my opinion. Like write down where you're at, where you're trying to get, and then how you're going to get there. And then, what are the positives? What are the negatives? What's the likelihood of the positive? What's the likelihood of the negative? What's the likelihood of something you didn't even think about? Even if that's like 1% chance Bitcoin goes to zero, and you're like, damn, I borrowed a bunch of money against my Bitcoin, bought a bunch more Bitcoin. So now, I have no Bitcoin, but it went to zero. Well, that's actually not that bad if that's the situation that happened. What's the, opposite situation? I, have one Bitcoin, I borrow enough to buy a second Bitcoin, and then Bitcoin doubles in value. So instead of just doubling what you had, you borrowed against your asset, and now you 4x'd. So you're much better off. So, it's all in perspective and how you look at it. So, but I mean, the best thing to do is look at how's it going to affect you taxes, how's it going to affect you net value, and then how's it going to affect you like actual like purchasing power in a best case and worst case scenario. That's what I try to look at, because I mean, honestly, like there's a lot of people who like, Roth IRA versus regular IRA. You can sit here and do the math like nonstop for like a million different situations. And in like 95% of those situations, you're going to end up making the same amount of money. Because what's the difference if somebody takes 50% of your money now and you invest it and they take nothing later, versus if they take none of your money now, you invest it and then they take 50% later? Well, in most situations, it's basically like nothing. There's no difference. The main situation where there's actually a difference is if in the future your tax rate is higher than your tax rate now. So say you're like super poor now and you're in a low tax bracket. Well, if you invest money in a Roth IRA now and you pay your tax bracket and it's only 25%, but in the future you're rich, so you're going to pay 50%, or taxes just go up and you're still the same, wealth, but taxes are up to 50% on normal people, and before they were only 25%, you're better off in a Roth IRA. And vice versa. If you're rich now, but you're probably going to be poor in the future, you're better off investing a ton of money in a Roth IRA now. Oh, wait, no. I think I said it the wrong way. If you're rich now and you're going to be poor in the future, you're better off investing in a regular IRA now and then just paying the taxes in the future, because maybe you're only living off like $50,000 a year in the future, but you're living off $1 million now. Now, obviously, that's like a super bearish way to look at your life. I like to think most people look at their life as like, in the future, I plan on doing better than I am now. And based on like the trends in taxes, I imagine probably in the future, taxes are going to be higher than they are now. Theoretically, the Roth IRA is better. So, but I mean, it's like anything. There's so many different ways to look at everything, and there's so many different factors, because it could be a difference of what's the probability that I'm going to need this money in 5 years versus I need the money now. Well, you already paid taxes on it in the Roth IRA, and then you take it out and like you're kind of screwed, versus if you put it away and then you pay taxes in 5 years on it and you pay like early withdrawal, and then you get your money back, but it's like, damn, it never played out. So, I mean, there's so many different factors, I think, to everything. And like, who even knows, like counterparty risks, all that other stuff. It's like impossible to even try to give somebody advice or even think about giving someone advice. But I think the most important thing is to just look at the best case scenario, look at the worst case scenario, and then look at what the probability is inside. What's the best case scenario of you loaning out your Bitcoin as collateral to get more money? What's the worst case scenario? And then what's the probability of each? And then think about, in the worst case scenario, you lose your Bitcoin and it goes to $1 million a coin. In the best case scenario, nothing bad happens and you double your stack of Bitcoin by borrowing against it. And then what's the probability of both those things happening? And then, what's like the middle ground and the most likely situation? Because that's what I look at. I'm trying to deleverage after parabolic moves. So I would say, for me right now, the last thing I really want to do is borrow against any of these things as collateral, especially if there's lockup periods. Because like, I mean, if you borrow a bunch of money against a Bitcoin and it's your collateral, and then Bitcoin goes down in value, you still owe the same amount of money. So if you take that money and buy a bunch of stuff and then that stuff all drops in 50% of value, you basically borrowed money and then lost 50% of that purchasing power. So for me, I want to lever up at the bottom of bear markets and I want to de-lever at the top of bull markets. And for me, the markets look very toppy right now. So for me personally, as far as leverage and as far as borrowing against assets, unless you have a specific reason and a specific plan of how it's going to benefit you, I think me personally right now, the last thing I want to do is lever up against my assets. I would rather be going into the future owing no one with so much uncertainty in so many places, and then diversified so that if this worst case scenario happens, I'm still okay. If this worst case scenario happens, I'm still okay, etc. Right down the line. I want to cover my ass, and I'm willing to risk a percentage of my portfolio in each of these different areas to cover my ass, even if eventually they go to zero. And that's how I look at like gold and Bitcoin. Gold and Bitcoin are like two scenarios where you hope the whole monetary system doesn't collapse because the world's probably going to be a worse place, at least short term. But at least you'll be okay because you'll have done well in Bitcoin. Same with gold. Like, you hope the world monetary system doesn't collapse and we go back to a gold standard and people are starving in the streets and nothing's worth anything and there's massive inflation. You hope that doesn't happen. But if shit hits the fan, you're covered. And, at least you'll be okay and you can probably take care of your family too. So that's how I look at it. Like, I look at the worst case scenario, best case scenario, average scenario, and then probability of each. And that's how I look at like most of my decisions in life. You think about like speeding down the road, like, and I'm about to get out of here after this because it's been a long tangent. But if you look at speeding down the road and you think, well, I could get to my destination 5 minutes sooner, best case scenario, I could get pulled over and get a $250 ticket, worst case scenario, or maybe I go to jail. And then like, what's the middle ground? Like maybe I go 5 miles per hour over. The likelihood of getting pulled over is like almost nothing. And if you do get pulled over, the punishment's probably minimal. So, it's always like that kind of risk reward scenario, I think. Seems like Bitcoin volatility has settled down. Yeah, I mean in the short term, but I wouldn't expect Bitcoin to sell off $15,000 and then just like sit there. I would expect a reflex rally or I would expect continued selling. But the real question is what's going to happen over the next 22 hours? Are we going to see price come back down and fill that wick back out and print another big red candle? Are we going to see price pump back up to the upside and it's going to look like, basically like a double bottom on the daily and we'll continue back up? I mean, anything could happen. Short term, yeah, definitely volatility settled down. But I think typically when you see those moves leading up to a daily like that, when we see a move like that leading up to a daily confirmed cross to the downside after putting in a lower high at all-time high, after putting in like months of basically like sideways action or weakness, looks more than likely to me like that was probably just a reflex rally off of a very, very heavy like sell candle or two. But I mean, it's 10 o'clock now. We've had 2 hours of this candle and, we're basically back to where we closed the candle yesterday or 2 hours ago. So it's not like super bullish to me. It's definitely what you would expect to see. But the real question is does it hold? That's my real question is, does this hold or is this just a dead cat bounce? And like, if we're in an overall bullish uptrend and we get a heavy sell volume come in and a nice wick on the bottom, I'm wanting to buy that dip. But if we're potentially rolling over back to the downside and majority of markets are showing weakness and majority of markets are below the 200 moving average and we're potentially topping out, I'm looking at it as there's probably just a reflex rally. Yeah, definitely. Our kids appreciate that, man. Everybody make sure to hit the like. But yeah, I'm going to call it there. I'm going to get out of here. I've been trying to keep in between 1 and 2 hours, and we're right at the 2 hour mark. So that was plenty of time of tangent and everything. And I will see you guys on Friday for the weekly market wrap up. Appreciate all the likes, subscribe, shares, all that good stuff. Appreciate all the positivity and everybody tuning in today. Appreciate you guys. Everybody have a good one. Crypto trend trader. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. And I'm out of here.